welcome to the trade. Before we get into the technicals, a quick look at what traders are watching there. And US President Donald Trump has declared an interim deal aimed at ending the conflict with Iran, saying that that was over. He warned of further US strikes, but then he kind of backtracked and hedged somewhat by saying he didn't think the war would continue. Separately, the International Monetary Fund cut its 2026 global growth forecast to 3%, citing risks from the ongoing conflict. We also had minutes from the Federal Reserve's latest meeting showing policymakers remaining concerned about inflation. Markets pricing in the possibility of another Fed rate hike by December. That saw US Treasury yields move higher, investors selling bonds amid these rising inflation concerns linked to surging oil prices. And as we discussed, the US dollar has strengthened on safe haven demand following the escalation in geopolitical tensions. The Aussie dollar is buying 69.3 US cents. Let's get into the charts now with Peter Pan from AC Securities, who joins me now. And Peter, kicking it off with what we're seeing with the Nasdaq 100 and I guess what it's showing us about broad investor sentiment.
Yeah. Look back at the Nasdaq price action over the past few years, there is a clear pattern. Pullbacks tend to start around earnings season, and this time is no difference. Ever since Micron Technologies earning, Japan, Korean, and Nasdaq stock has all pulled back, and this pullback is not over yet. If you look at the recent pattern, how Korean stock market opens tend to have a big influence on how US stocks perform later that day. And today, Korean market opened high but then faded quickly, which means ASX's correction is still ongoing. And on top of that, there is pressure from the US and Iran tension this week. So Nasdaq may remain firmly in bearish trend overall. Technically, Nasdaq 100 index has already break the previous low around 29,000 yesterday, and the CCI also break below negative 100. The 100-day moving average is turning downward, also suggesting the downside pressure is still very strong. And 29,000 may not hold this time. So if the Nasdaq index breaks below 29,000 today or this week, we could see a further short-term pullback towards the previous low near 28,000 and 2,500. But considering the AI sentiment as being swinging hard lately, a break above 29,300 is the stop loss signal for the short position.
All right, well, then we move into what's happening amidst all these geopolitical concerns with gold. We were just talking about that earlier, that it doesn't really seem to be holding up as much of a safe haven as you potentially might think. But what's the outlook for gold, Peter?
Gold has actually been tracking the direction of Korean stock market opens every morning. This is the AI demand story at work. Whenever the AI sector takes a hit, gold and silver tends to fall right along with it. But at the end of the day, what really drives gold direction isn't AI, it's Fed rate hike expectation. Given the recent news like weak non-farm payroll, a more dovish wash, and sharply lower oil price, gold has actually started to reverse higher. But this week, US-Iran conflict sent oil price spiking again, put gold's rebound on hold. So gold is still stuck in a downtrend right now. Technically, gold hasn't managed to break above the key downward trend line overhead. The 100-day moving average has turned back down again, and OBV is still trending lower, so gold's bearish trend is not over. Right now, the trend is still mainly on short side. Yesterday's escalation in the US and Iran conflict triggered a second wave of inflation fear, which make the gold price break below the key support level of 4,090 neckline. So the bearish approach, the best approach is still to follow the short trend with the target of 4,000 or even lower.
And how about the Aussie dollar and I guess its relationship there too with gold, Peter?
Yeah, so the Aussie dollar and gold has tracking each other closely right now. That's not hard to understand because the Aussie dollar is also getting dragged down by the AI sector pullback and also plus the pressure from a stronger US dollar. But end of the day, just like gold, the the really what really decide the Aussie direction is the Fed rate hike is expectation. So the technical rate we just did on gold applies almost directly to the Aussie as well. So from the chart, the trend line is providing resistance. OBV keeps trending lower, and the Aussie is clearly in a bearish trend. Uh, the Aussie dollar may break 0.692 today or this week, and continuing falling towards the previous low near 0.687. But watch closely if Aussie dollar breaks back above 0.696, that may signal the downtrend has broken, and that's the point to cut losses right away.
Now we move on to the key focus as well, which is oil, very much gyrating on these headlines. Are they on again? Are they off again with the peace deal? What is crude oil showing us, Peter?
So after the two rounds of the US airstrike on Iran, oil price bounced back quickly. Given how worried the market was early about the OPEC rising production and causing a long-term oversupply fear, it's likely oil price was actually oversold at this level. So the question is not whether oil price will goes up, but how high it will go. Fibonacci retracement level can help map out where this rebound may go. On WTI chart, oil has already break above the head and shoulder neckline, and 100-day moving average is turning upward. We are officially in an uptrend right now. The 0.238 Fibonacci retracement around 73 was the first resistance zone, but that has already been breakthrough. And overhead, the gap on the June 15th created when US and Iran signed the MOU lines up with several overlapping Fibonacci levels, which make 82 a solid final target for this rebound. There is another resistance cluster around 76.3, closer to current price, which could be a good spot to take partially profits along our long position way.
All right, Peter, we'll leave it there. Some really interesting moves with the technicals. We appreciate it always. Peter Pan there from AC Securities. That does it for this edition of The Trade. Be sure to join us next time.